it's the same discussion that we had on time frame. So what we originally studied in our English complete trading framework when we were discussing market profile, we started with scalpers. Okay, then we said that the next higher time frame is intraday. Then we said that next higher is short swing, then long swing, and then investors and all those kinds of people. So these were our time frames. Now what used to happen was not everybody is trading intraday, and someone will define short swing as 2 weeks. Someone will say it is just 1 week. For someone, short long swing is 2 months, and for some it is just 1 month, and for some it is 15 days, right? So there was this confusion that was going on continuously. Now what I have suggested now is you decide a time frame you want to trade from. So my time frame is short swing time frame. So what I will do is I'll state it clearly that I am going to trade the weekly expiry. That puts my trades, because I'm establishing them on Mondays or Tuesdays, that says that I will be holding the trade for 4 to 3 days. Now what I will do is I am worried about traders who have a holding time frame of 4 to 3 days, who are establishing their positions on Monday or Tuesday. I want the markets to stay either above a certain reference or below a certain reference, depending on my directional bias. Directional bias is what I feel the market is currently doing, whether it is trying to go higher or trying to go lower. I'm not saying whether it is going higher or whether it is going low. What I'm saying is whether it is trying to go higher or trying to go lower. Whether it is doing a good job or not, that's the second part of the question. But right now I'm trying to ask whether it is trying to go higher or lower. In current scenario, in my current trade, I believe that the directional bias is up. What it means is that market is trying to go higher. And if it does not do a good job, then I will definitely think about my trade and see what I can do about it. But the directional bias is up. So what I want is to see what other time frames can affect this directional bias in my time frame of 4 to 3 days. So what I have done is, let's say I want the market to stay in this range or above this reference. Okay. So what I am doing is I am saying that for market to stay in this range, whenever it comes closer to the top of the range or bottom of the range, someone has to ensure that the market stays within this range or this time frame. So I am saying that if market, those traders who are trying to maintain the time frame, maintain this range, I am calling them as status quo time frame. Then the traders who are actually trying to break out from this range, obviously you know that if you want to break out from a range, you need one higher time frame, and that one higher time frame is what I am calling discovery time frame, because they are trying to discover new areas to create a balance. Already we are balancing in this zone, now we need a new area to create a balance, and that is where a discovery time frame will come in. And whenever market goes near this extreme and you see a lot of sideways movement and market creates exhaustion, and then you get a inventory adjustment break, right? Then this time frame I am calling it as exhaustion time frame, which kind of will foil the plans for discovery time frame, because they know that status quo time frame is going to short here, so they are prepared to absorb their supply and push the markets higher. But if this exhaustion or very smaller time frame, they come and join status quo time frame in selling here, discovery time frame can feel overwhelmed in the moment, and then they will give up on their plans to break out, and that will lead to an inventory adjustment break. So technically, if you have to see or put these time frames in a descending order, the highest time frame is discovery time frame. It is greater than status quo time frame, which is greater than exhaustion time frame. Alright, so you have to track these 3 time frames, and you are supposed to trade in this one, so that you can track one higher and one lower time frame, and be aware of the context that is the market is displaying right now or developing under, and then you can take your positions accordingly. Alright, so it is the same time frame concept that we studied, but a little different, put a little differently, that's all.